Do you expect there to be more announcements like Harley-Davidson, U.S. companies moving production overseas to deal with the tariffs so they can continue to sell in markets like Europe?
I think you will see more companies doing that. It may not be on a massive scale, but certain product lines, certain products that they might sell. But I think you'll see many more U.S. companies doing that because many countries all around the world are imposing tariffs on American-made products and services. Just the president was in Canada a few weeks ago and vilified all the members of the G7 there, and especially the Prime Minister of Canada, when in fact America has a trade surplus with Canada. And we're going after some of our own very strong allies that we depend on and need in terms of military support in the Middle East or in trying to present a common front against North Korea. So when we start imposing tariffs, other countries will retaliate, and then we up the ante. They will then retaliate even more, and that escalation will lead to a full-blown trade war. And in a trade war, the losers are consumers, workers, and companies on both sides. There are no winners in a trade war.
Harley-Davidson should never be built in another country ever, says the president. I'm sure there are a fair number of people who would agree with that. He says the oil will be gone and they will be taxed like never before if they want to bring those foreign-built bikes back into the United States. Two questions. Does the president have the power to tax them that way, number one? And number two, does he have the political capital? If he doesn't have the unilateral power to do it, does he have the political power to push that kind of tax through Congress?
Well, tax laws are actually made by the Congress and passed by the Congress. It's not something that any executive, Democrat or Republican president can ever impose unilaterally. But what Harley-Davidson and what many other U.S. companies will be doing is manufacturing their stuff that they sell overseas, so that they can avoid having to pay those tariffs.
Not bringing it back here. They're not going to bring back.
No, they're selling to locals.
So
right, they're going to sell locally the stuff they make here.
Is that comment then a snarl without a bite? Because they won't bring back the machines that they make in Thailand or India or Southern Europe or wherever.
So many U.S. companies are in fact manufacturing overseas to serve their overseas customers. It saves them on transportation costs, and because just like we in America insist that so much of what we buy here that we eat or consume or use in America must be made in America, other countries are doing the same thing.
Do you believe in Mr. Ambassador? I mean, could Harley-Davidson just be posturing? I mean, if you're going to manufacture in Europe, you're going to have a 35-hour work week. You're going to have a lot more costs imposed on you. There's a lot less productivity by labor there. I mean, there's so many reasons why they wouldn't do it.
Those are all factors that they're going to have to consider. Obviously, American workers are so much more productive, closer to their design and research teams. There are a lot of benefits to manufacturing having all your operations in one place and in one country. But that's a calculus that they're going to have to make depending on the level of the tariffs that they face.
I wanted to ask you about China, Ambassador Locke, and your expertise with the government there. So the Chinese market is down 20% from the recent high. It's in a bear market. Clearly, they're starting to feel the pain. And as you said, nobody wins in a trade war. President Trump knows that. President Xi knows that as well. Who do you think will blink first?
Well, I don't think you're going to have either side blinking for a while. There's so much pride, individual pride, national pride that's at stake. And China has already made it very clear that they do not want to be pushed around, that they will stand up to the United States. So we're going to see these tariffs going into place next week, and we're going to see what the Chinese do by way of retaliation. The question then is whether President Trump will then impose an additional $200 billion worth of tariffs on Chinese goods. The Chinese said that they will retaliate if that happens, and then the president says he'll possibly impose another $200 billion of tariffs on $200 billion of Chinese goods. That's virtually all of the stuff coming from China to the United States, which would be the clothes that we buy and wear, the shoes that we buy at department stores, our athletic gear, components that U.S. companies use in manufacturing their own sophisticated machinery which is then sold around the world. That will raise the price of goods that consumers and households have to pay, raise the price of goods that U.S. companies use. They'll either have lower profits or they're going to have to raise their prices, which then makes them less competitive all around the world.
So let me turn to the question of Chinese investment in sensitive industries in the United States and elsewhere around the world. You make the argument that we need to do something there because there isn't the level playing field of reciprocity about letting us invest into their market as easily. But you make the point or the case that to do that alone is far less effective than to do that alongside allies, the European Union, Canada, Mexico. But our relationships right now with Canada, certainly, with Mexico and with the European Union are not good. Is that then a non-starter?
No, I don't think it's a non-starter. While our relations right now are frosty with our closest allies here in Canada, along with the EU, nonetheless, all of us have common concerns and complaints about the closed sectors of the Chinese economy. And I think that, for instance, if Amazon or Microsoft want to go into cloud computing in China, they have to have a Chinese partner. And oftentimes that means sharing their technology with that Chinese partner. But Alibaba, the giant in China, does not have to have a partner here in the United States if they want to go into cloud computing. And so I think that all of the countries of the West with similar concerns ought to have a united front and impose similar restrictions on Chinese investment in our countries the same way that they do impose restrictions on foreign investment there. You just laid that out very clearly.
How much do the Chinese cheat and steal?
Well, the problem is that when you have closed sectors of the economy, and then the Chinese will say, if you want to invest, you have to have a Chinese partner. And the partnership has to be less than, let's say, 50%. America will have a 49% stake. And you have to deal with a Chinese partner. And in that joint venture, you have to share technology and trade secrets and things like that. That's where the concern is, because sometimes those partners, a few years from now, when the agreement ends, they will start using the technology, the know-how that they've gained working with the American or Western company to go off on their own and become a huge competitor to the U.S. or Western company. That's what we need to focus on.
Two things, Mr. Ambassador. I get that we should all be on the same page with our allies, but to a large degree, our allies were already in this position when it comes to the situation with the Chinese. I mean, we had already heard the French months and months ago talking about restrictions on Chinese investments into France. There were different deals in Europe that got held up or stopped because the Europeans are just as concerned and in some ways historically far more protectionist than we have ever been. I mean, isn't their position? Everybody can talk negatively about what President Trump is saying about our allies, but the fact of the matter on this position, a lot of them were already there, weren't they?
Well, some of those cases that you're talking about are mergers and acquisitions of Chinese companies trying to purchase and buy out foreign companies. And all countries, including the United States, have national security reviews. And many of those deals were struck down on national security concerns. But the point is that many sectors are open to Chinese investment where they can actually set up shop, not buying a foreign company, not buying a French company or a U.S. company, but actually operating and opening up businesses in those foreign countries, including the United States, without restrictions, whereas it's much more difficult for foreign companies to, let's say, do cloud computing in China or get into telecommunications or financial services. And the point is that there should be reciprocity. We should start limiting the ability of the Chinese companies to operate in the United States.
And is that even if they are not connected to the government? Is that just period all Chinese government companies, or is that state-supported enterprises that you would focus on in particular?
I would focus on all companies, not only the private companies, not just the government-owned companies, because the restrictions on American companies, on foreign companies in China, has nothing to do with whether or not it's a private company or a U.S.-backed or
So let me ask you this. You saw the markets yesterday, right? I mean, the Dow was off nearly 400 points when this precise position that you are taking was deep in the markets and people were concerned, and Peter Navarro comes out and says, oh, wait a minute, actually, that's not what we are thinking about at this point. But you think it's a good idea?
I think we need a united front. We cannot do it alone. We need to work with all of our allies and make sure that certain sectors of our economy are perhaps restricted if the Chinese are going to have similar restrictions on foreign companies doing business in China. What the administration has been talking about is limiting even joint ventures and mergers and acquisitions and expanding the scope of the national security review. That's a totally different matter from what I'm talking about.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.